Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial conditions.
There. All right. Let's talk about what's going on in the metal markets. Now, Bill Baruch has been with us on AgriTalk in the afternoon show a couple of times. I'm not sure that Bill's been on the morning show with us to talk about what's going on in the metals, but Bill is the founder and the president of Blue Line Futures, and he joins us right now. Bill, it's good to talk to you, man. How are you?
I'm doing great. Thanks for having me on. It's great talking with you.
You bet. You bet. Okay. So the gold futures, the silver futures are higher again this morning. But this has been an historic run, Bill. Give us the baseline information that we need to understand what's going on.
This has been, a decade in the making. I mean, everybody remembers 2010 into 2011. Big move in gold and silver, and then they went to sleep for a decade. But tremendous technical patterns, I think are a huge tailwind. At the core of this, fundamentally, though, we've seen a tailwind from de-dollarization. However you want to slice it, it could be de-dollarization from BRICS, de-dollarization from policy here in the United States, onshoring, de-dollarization that came from after Russia invaded Ukraine and the confiscation of Russian assets around the world. Things like that all have been a tailwind to de-dollarization. You have widening fiscal deficits. You look back even just on Monday, Tuesday in the news, the Prime Minister of Japan is talking about tax cuts and doing a snap election to firm up support. Gold rallied on President Trump's comments with tariffs on the EU, but gold also rallied as Japanese government bonds were falling to new lows, yields in the long end hitting record highs because of that widening fiscal deficit. And then one other, we look at these as three-pronged, and the last tier I'm going to discuss is I think something that's understated. Basel III, that came into effect. Not many realize it actually came into effect in July of 2025. This is in the aftermath of the great financial crisis. There was a lot of talk about banks' balance sheets, and then early in 21 or so, Basel III incorporating gold as a tier one asset as equal as cash on balance sheets, but not many realized it only took effect in July of 2025. So central banks have been hoarding gold and buying gold as much as they could, into this, ahead of this. I mean, central banks added another, I think it's 220 metric tons in Q4. So the tailwind, even at higher prices, is still there. So that's the way we look at it. And the tailwinds are there because, we could see deleveraging. You could see, market participants sell at certain times for whatever reason it may be. But the central banks, they're holding this for long term.
Yeah. Okay. It used to be that we would see some strength in gold, the safe haven buying. It's not safe haven buying anymore. I mean, there are, and this Basel III issue, I wish I understood it better, exactly what triggered it, but foreign central banks are not done buying gold yet. I mean, they've come right out and said that some have come out and said that this is what we're going to acquire over the next year, right?
Absolutely. Poland, just this week, there's news on Poland, reaffirming that their purchases in gold are going to continue and ramping it up due to geopolitical concerns. So I don't see this being, something that dissipates. And, I find myself using the term that it's different this time. It really is. And, going back to the de-dollarization part of it, you're seeing other countries begin to transact outside of the dollar. And that's really what's very important here. They're using gold as that currency to transact. And, that really kind of starts at BRICS. And there's tailwinds here from the deglobalization that we've seen here from President Trump's policies. And I think there's a number of tailwinds, but you get stuff around the edges too. I mean, silver has, I've always said, even when silver was in the high teens, low 20s, and gold was, below 3,000. I mean, I've been saying this for much longer before that. They work the best when they're working together. One can make a move, the other makes a move. I say that about the S&P and I say that about stocks in different sectors. Good rotations are good for the markets. silver's been a tremendous tailwind as well. And I still think that you're going to start to see more. You're going to start to see central bank activity around silver potentially, not because it's a tier one asset, but because the loftiness in gold. Maybe not at these levels, but you start to see other things in the fringes where silver had ETF, physical backed ETF demand was just surging. So they're trying to bring physical silver into London and London exchanges. You see China talking about export controls around silver, around critical minerals. You get copper and silver added to critical minerals list here in the United States this year. So there's just a number of policy developments that it's not just gold and the de-dollarization of gold and Basel III, but it's really working its way through the entire system here in the metals.
Yeah. Okay. Yeah. Silver's kind of been outperforming gold even here over the past week or so, hasn't it?
Yeah, it has. I mean, over the past, I would say since that run in October, where silver really started soaring higher through $50. And you go back to 2011, that was the high in silver. That was also the Hunt Brothers high in silver several decades ago too. And once we got above silver, it seems like the gloves were off, and this thing was punching higher. And it's been that way since. I mean, we could see $100 this week maybe. But silver's going to be more volatile. I think you have to understand that when you're trading it. But gold's going to be something that has a little less volatility, and we like both quite a bit.
All right, yeah, 95.50 right now is where we've got silver futures. So it is an impressive market, no doubt about it. Okay, why does it matter to the people that are listening, Bill? And take that from a couple of different angles. We've got consumers that are listening. We've got farmers that are listening. Why does this matter?
I mean, I think from the core of it, you build out a portfolio. We build out, how your assets are invested in a situation where we're talking about a farmer listening. Your assets are invested in your land. I think the really way is to be diversified. And when I build out stock portfolios at Blue Line Capital, we do incorporate a diversifier sleeve. And in that diversifier sleeve, we have gold, silver, gold miners. We have midstream energy for cash flow. We have commodity ETFs. And that covers about 10% of our portfolio. I strongly believe in diversifiers. And so it's important to look at it from incorporating gold into your portfolio from the long-term thought process. And, I think when you're looking at these policies, in the United States, the GDP to deficit, did improve a little bit. But, if you look at some of the stuff that could happen here as the year evolves, if we get walkbacks on tariffs, that could threaten the big, beautiful bill. That could also work down into needing to spend more. And that is another tailwind to gold. I really believe it makes sense to have diversifiers in your portfolio, and that includes gold and metals and commodities.
Gotcha. What's the signal to the rest of the commodity world, Bill?
Yeah, we look at gold as being the canary in the coal mine. And we believe that once you go through, you see gold make its move, you have silver follow, industrial metals begin to follow, platinum and palladium. I think they sniffed out a uptick in auto demand in quarter 4. They ran up a bit, but I think that bull market is really beginning. You start to see copper set a new record high, and then it works down into energies. And I think a way to think about it too is the world's fertilizer, is produced in Russia, Iran, Canada. It's not unique that there's geopolitical tensions around Russia and Iran. They are big buyers of gold or producers of many commodities as well. So I think there's a really close tie-in where you start to see the increase in metals start to work down into energy. And then when energy costs start to increase, it works down into the agriculture space too. So I think it's really the beginning of a commodity super cycle that we're seeing here right now. And I still think we're in the early innings.
I hope it's the early innings, and because it doesn't feel like the ags, outside of cattle, it doesn't feel like the ag commodities have had an opportunity to even come to the plate yet in this game.
Yeah. Well, June hogs, big breakout. been watching that one really closely too.
Gotcha. Okay. So commodity super cycle, very early stages. This, a super cycle, that's something that it can take 10 years to play out, right, Bill?
That's what we're thinking. This thing is, it is one of those moments. It is different this time, where you see gold making this move for all the right reasons, and then you have the commodities that follow. But the demand here isn't just from a transactional standpoint where gold, it cannot be transacted rather than the dollar. You have data center build outs, the high demand for gold, demand for silver there. We have all the geopolitical shifts that are taking place, the importance of critical minerals, the U.S. going into Venezuela, the importance of energy and crude oil, and what the White House is emphasizing right now. So I think this is early innings.
Bill, usually when I hear it is different this time, my skeptic knob gets turned up, but I hear you. This is a different market than what we've been used to. Bill, thank you. Thank you so much for coming on. We appreciate you, man.
Thanks for having me.
All right, Bill Baruch, founder and president of Blue Line Futures. Lane 8
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition. All information, communications, publications, and reports, including the specific material used and distributed by Blue Line Futures LLC, shall be construed as or is in the nature of a solicitation for entering into a futures transaction. Blue Line Futures LLC does not employ research analysts or maintain a research department as defined in CFTC Regulation 1.71.